Sports Network. I'm Michael Yorba, your host. Thanks for joining us. And we're also streaming to you live on yorbamedia.com. Okay, Nick Santiago, President and CEO of InTheMoneyStocks.com on the show right now. Nick, thanks for showing up.
Great to be back, Michael. Thank you for having me.
All right. We've been round and round about this election thing in the markets. All right. What does it tell you now?
Well, right now, I think the markets, even though you have a little bit of a positive session today, it's really not that great of a move. Overall, I think that the markets are just trying to digest all this QE. I know we've moved up a little bit since the last time we've spoken, but I'm still thinking these markets want to go down to around the 140 level on the spiders, 1,400 on the cash S&P 500 before any significant secondary move occurs. Right now, the markets are just digesting the recent QE3. A lot of that was already baked into the cake, so and a lot of institutional traders are waiting for a pullback before trying to jump back in this thing.
Okay, well, let's start with some of these early indicators you pointed out to us, like, say, the first one, JP Morgan. Yeah,
well, JP Morgan, that stock's holding up extremely well at the moment. It held that big breakout move it had on, September 13th. And right now it's trading back up towards that 42 level. There technically is nothing wrong with the stock right now. So as long as JPM holds up, generally the market should hold up. That's been a great market barometer for us. I've been using it for quite a while, and it continues to be a good market barometer at this time.
Any targets on the upside for this JP Morgan stock?
It's a little bit tough because you have a real big resistance level coming up around 42.50. You have to see how the stock reacts there. That was basically where the stock began to break down in April of this year, this past April. So 42.50 is really going to be a big, big resistance point, in my opinion. Okay. All right. What's next? Excuse me?
What stock do you want to talk about next?
Oh, what I wanted to talk about today was I wanted to look at the XLU. One thing I've noticed about this is utilities. This is the utility ETF. And the one thing I think about this ETF, I should say, is that it topped out on August 1st. That's basically when interest rates put in a significant low. It's had a nice little rebound over the past week and a half or so, but this thing at 37.25, 37.15 is going to hit a wall of resistance around that level, and I really don't see a lot of upside in it. So I know a lot of traders thinking utilities are a safe haven. I wouldn't be so excited about the utility market, utility sector right now. I think that's susceptible to pulling back again to the 35 level, and I think that's where traders could look for a nice bounce.
Okay. So you don't think we're going to break that low, that 35 level?
Not right now. I think the 35 level is pretty solid. If you go back and you look at a weekly chart of the XLU, what you're going to see is a really long base going back to October 2011 all the way till April 2012, and that should hold up.
Okay. All right. Got it. What's next?
Okay. What I also wanted to speak about today was the U.S. dollar index, and the reason why I bring that up is because this is probably still the most important chart anyone can follow. The dollar has completely been annihilated today, and hence you got a big rally. Yesterday, when the dollar was very strong, you'll notice that gasoline and oil sold off. Today, the dollar is falling or plunging lower, and oil and gasoline are surging. So, again, the dollar it dictates every move in the stock market, in the commodity market, especially in the oil and gasoline market. Keep an eye on that. Right now, what the U.S. dollar index is telling me is that it's still very vulnerable. It's got a short-term bounce in the making here, which could last maybe another 4 or 5 weeks, but I don't see the dollar holding up after that.
Well, what about this low that we picked up here about 2 weeks ago? Do you think we're going to break
it's a decent little bit of a low. I think that can hold up for a little while, maybe another 4 or 5 weeks, but after that, we're probably going to break through that level.
Okay, that's what I'm thinking because it just got resounded, just slapped back right into the chair from $80. It just turned around and went south. So my question is, this trend, this lower trend, higher rates of inflation, are we about to see an acceleration in inflation as we go forward?
I think we are. I think we are. I think the central bankers have their eyes set on bringing this dollar down to around the 76.5, 76 level ultimately. And, that's going to cause higher inflation across the board. Just look at gasoline. Even though it sold off yesterday, today gasoline is back up. If you look at the UGA, which is the United States Gasoline Fund, that's an ETF to track gasoline, you'll see this is almost at the high for the year, and not even that far away from its all-time high, which was back in 2008. So I ultimately think this is just massive inflation creation by the central bankers, and believe it or not, it can last a while, but when it ends, it's going to be ugly.
Okay. Well, I'm looking at the UGA. You mentioned it. Do you have any higher targets, higher price targets? Excuse me. Let me try and get that one out.
Sure. Well, if you could get above $62 with any real conviction, right now the volume has been real light on this move back up there. But if you get through there on any real conviction, I mean, $67, $68 is in the cards. I mean, this thing has a lot of upside. If you look at the weekly chart, it's just building a sideways base right now for about 5 weeks. The longer that thing can base and hold the $60 level, the more power it has to the upside. And, the next level would probably be around $68.
Okay. All right. Something that's not on the list here for today is the banking index. I know that we talked about the JP Morgan rally here and higher, but I pulled up the banking index on a weekly basis, and it looks to me like this thing could, if we break that high that occurred 2-3 weeks ago, this could get out of hand. It could get going.
Yeah, what I like to do when I look at the financials overall, I like to just watch the XLF. And, if you look at the XLF, we still haven't gotten above that September 14th high. So, but yeah, I mean, it's true. You could get, higher financials, and that ultimately is going to lift the market. I think right now at best we look for a small pullback correction, may last a few more weeks, but ultimately, this market wants to push higher.
Well, especially between now and elections, anything can happen because it's overly emotional. One side left, one side right. Last night, the Republicans, maybe on the 11th with vice president debates or vice presidential debates, we could have people thinking left. You know what I'm saying? Sure,
absolutely. There's definitely a lot of emotions are flying high. I accept that, and and even so, if you just look at the overall S&P 500, what you'll notice is that we basically put in a high on the 14th, which is the day after QE3 Eternity was announced. So, the markets are really just digesting that for the most part, but technically there's really no damage out here.
Now, what about this TLT though? I mean, I'm looking at it here. We had a top there at the end of July, another top in the beginning of September, and then now we're rolled over again.
Yeah, well, if you look at the TLT, even over the last 6-7 days, you'll see that it was basing below the 50 MA. Today it's trading decently lower, and when that happens, obviously, the markets will get a little bit of money in them. But I think that TLT has a legitimate shot right now of going up to the 127 level. Around there, Michael, I think it's really going to struggle, and I think it's going to have a hard time getting above that level. But I'm going to give that TLT the upside bias to around 127.
Okay, where's the support area right now? Because we're kind of negative on the day.
Yeah, you're negative on the session right now, but if you just take a simple fib retrace from the most recent low from the 14th to the most recent high, you're going to see that you're coming up into the 122.50 level, which is going to be the 0.382 retrace. That was also a little gap down pivot that occurred on the 13th of September. So I have to think there's going to be at least some short-term support right around here.
Okay. All right, that's good. But a failure up there around the 127 area.
I think it definitely fails around 127.
Now, with that being said, I mean, obviously we're talking about a time frame that could be between now and say, elections. But with that being said, ultimately, are you bearish this vehicle?
Well, yes, you have to be. I mean, the way that it's come off those highs, that is not a pretty picture. But if you look at the bigger time frame, like the monthly and the weekly charts, it's still holding up. Theoretically, it's not below the weekly 50 moving average. And on the monthly chart, I mean, realistically, this is fine. I mean, this is just nothing but a natural pullback. It's still well above the 50 and 20-day moving averages, and it hasn't even tested or broken below the 120 level. So, on the bigger scheme of things, this is not a bad-looking vehicle overall. I know people are looking for the bond market to just crater. I don't think that happens because you technically have interest rates set by the central bankers at, negative rates. I mean, we have the Fed funds rate at 0%, and then you have all of this bond buying going on. I mean, it's hard to think that this thing is really going to be a true bubble. I think at worst-case scenario, it comes in very gradual.
I got it. All right, we're about out of time. Before we go, do you have any events coming up?
On the 20th of October, I do have an In the Money Stocks methodology event on Saturday afternoon. We just got done with the live trading event last week, which was a great success. And the next event will be on October 20th at 1 p.m.
Great. Sign up at inthemoneystocks.com, or is there some place, special
just
place?
Come on over and check out the education page, and all of our webinars will be right up there.
Great. Thanks, Nick.
Thank you, Michael. Have a great day.
You too. Everybody, Nick Santiago, President and CEO of inthemoneystocks.com.